A wild roller coaster ride for Wall Street has kicked off the week. The Dow briefly plummeted over 1,000 points during the first few minutes of trading on Monday, its biggest ever one-day decline on an intraday basis before recovering. For the day, the Dow ended up closing down 588 points at 15,871. This has the S&P closing down 78 points at 1893 and the Nasdaq down 180 points at 4526. All this, however, is the ramifications of China's slowdown. 2 weeks ago, they devalued their currency. Their hope here was that they would help their economy, they'd help imports and exports, you'd see China rebound. That hasn't happened. China has sold off for a week straight, and here we're having the trickle-down effect of U.S. investors recalibrating their expectations of China. For U.S. investors, we've seen this big sell-off. You need to focus on two things. One, for your portfolio. Markets don't go straight up. Sure, we've had a sell-off over 3 days, losing 1,500 points, but this will happen after 6 years of rallies. The second thing is, this all comes down to China and their trickle-down effect in other economies. While we look at Chinese economic data and we say, I'm not sure if I can trust it, you can trust Germany and the US and other big developed economies. Their data comes out later this week. You should focus on it with a fine-tooth comb. The impact of China on these other economies is why the markets are selling off, and the economic data we get should tell us whether these worries are real. In the short term, though, the Federal Reserve was widely expected to raise interest rates in September. Now the thinking is they may not. We have 2 Fed Reserve speeches this week. That should give us an indication whether September is going to happen. For all up-to-the-minute markets news and analysis, please go to WSJ.com.